When you look at the US stock market, things might seem pretty calm, but trust me, underneath the surface, it's a whole different story. It's getting pulled in two completely different directions. So today, we're going to break down that complex story for you.
All right, let's set the scene. We're talking about the market action from Friday, October 31st, 2025.
Now, if you just glanced at the closing numbers, you'd think, hey, pretty good day. I mean, the S&P 500, the NASDAQ, the Dow, they all finished in the green. It even looks like we might be heading for a sixth straight month of gains. But that is definitely not the whole story.
Right. The real story here is this massive tug of war going on. On one side, you've got this explosive, undeniable proof that AI profits are for real. And on the other side, you have the Federal Reserve basically shouting from the rooftops that rate cuts are not coming anytime soon. So let's break this down.
Okay, so first up, on one side of this fight, let's talk about the undisputed champion of the day. This was the single biggest positive force in the entire market, Amazon.
I mean, look at this. The stock absolutely soared, jumping almost 10% in just one day. On a day that was frankly filled with all sorts of mixed signals, Amazon pretty much single-handedly dragged the market to a positive close.
So, what was the rocket fuel behind this incredible surge? What exactly did investors see that got them so excited?
Well, here's the why. It all boiled down to Amazon Web Services, their cloud division. AWS posted 20% revenue growth. That's the best they've seen in years. And this was huge because it proved that all those billions of dollars being poured into AI infrastructure, they're actually turning into real, tangible profits. This calmed a lot of fears about Amazon's dominance in the cloud and sent a really powerful, positive signal to the rest of the market. But for all of Amazon's good news, it was met with this powerful mix of fear and caution, which created the day's biggest negative pressure. And it all started with the Fed, two of its more hawkish members. And by hawkish, we mean they're the ones who favor higher interest rates to keep inflation in check. They came out and publicly shot down the market's hopes for a rate cut in December. That put an instant chill on investor optimism. And then we saw the flip side of that AI coin, right? Well, Amazon proved that AI spending can lead to huge profits. Investors started getting really nervous about the costs for everyone else. Meta and Microsoft both took a hit as the market started to worry that their absolutely colossal spending on AI could end up crushing their short-term profits and piling on debt. Now, this chart really shows you the market's hidden weakness. The consumer discretionary sector, that stuff like Amazon, was up over 4%. Fantastic, but look at the broader information technology sector. It was actually down. This is what we call a narrow rally, and it's a classic warning sign that the market's foundation might not be as solid as it looks on the surface. And just to sprinkle a little more caution on top, Michael Burry, the famous investor from The Big Short, he dropped this cryptic warning. And when a notorious market bear says something like that, especially during a time of intense AI hype, it really fuels fears that things might be getting overheated. Okay, so beyond the big battle between Amazon and the Fed, let's zoom out and look at some of the day's other big movers and shakers to get a wider picture of what's happening. Yeah, it wasn't just about the mega caps making headlines. We had Netflix popping on news of a 10-for-1 stock split. Western Digital surged over 10% thanks to blowout earnings driven by, you guessed it, AI data center demand. Coinbase had a great day after a strong earnings beat. And then there was First Solar. They were the top performer in the entire S&P 500, jumping a massive 14% after just crushing their profit estimates. And looming over all of this was the ongoing U.S. government shutdown, now in its 31st day. And this is creating a huge problem for everyone. We're not getting key economic reports on things like inflation and jobs. This creates what's called a data vacuum, and it makes it incredibly difficult for the Federal Reserve to make informed decisions about interest rates. So you've got this crazy tug of war happening. As an investor, how are you even supposed to think about navigating this market? Well, here are 3 potential ways to play it. All right, this chart basically lays out the playbook for you. Scenario 1, you believe the AI rally is just getting started. The strategy? Stick with the proven winners, like Amazon and NVIDIA. The risk, of course, is that you're betting into a potential AI bubble. Scenario 2, you think the rally is going to broaden out. In that case, you diversify into sectors that have been lagging, like biotech or solar. The risk there, you might miss out if the AI stocks just keep on soaring. And finally, Scenario 3, safety first. You can seek stable income by moving into bonds, but just know you might get lower returns if inflation starts to cool down.
So when you weigh the incredible promise of AI against those pretty stark warnings from the Fed, where does that leave us? What's the final takeaway?
The most important thing to understand is that the market is balanced on a knife's edge. It's caught between the immense promise of AI profits and the very real risk of high interest rates just choking off that growth.
And that means as you move forward, there are two huge risks you've got to keep on your radar. First, there's the AI bubble question. Is this a sustainable tech revolution, or is it a speculative frenzy that's just concentrated in way too few stocks? And second, a hawkish Fed. I mean, can the market really keep rallying if the Fed refuses to cut interest rates?
And all of that leaves us with one final thought. We know for sure that AI was driving the market today. The big question is, what's going to drive it tomorrow? Thanks for joining us.